Okay, first of all, Merry Christmas, everyone. Hope you're having a great time with the family. And yeah, hope you're enjoying yourself, taking a break. It's been a well deserved break. It's been a long year. It's been a long year, man. A lot of ups and downs, a lot of wins and losses, a lot of longs and shorts. But we're still here. All right. So let's do it. Let's take a look. We're gonna split today's video up into three segments if we've got time. I'm going to really try and speed through the three segments so that we can actually fit in everything we need to talk about. So, first segment, we're going to have a bit of a trade recap, see if the trades we've actually been in has done well. I'm also going to talk about Discord and how you can get in touch and stuff like that. Second segment is we are going to look at future trades, see what the next trade might be. We might have a Christmas trade or Christmas present, in order. And the next segment, I doubt we're going to have time for this, but let's see if we can talk about some trading psychology and just, talk about some concepts that can help you redefine or realign yourself as a trader, whether you're trading full time, whether you're trading part time, you know, whether or you're just picking it up as a hobby and you're progressing or just back testing essentially. Whichever avenue you're going, this should be very useful to yourself. So let's get straight into it. I think good position to start is actually to look at what the prior trades were, what areas we were looking at. And let's see, I think we got a nice juicy trade over the week. I think on a Monday, we got a nice juicy trade, which I am in. I'm still in that trade. But I'm just going to talk to you about that trade. And so I'll quickly show you that trade. So this is the trade that I am still in. It's about 3.5 grand up, only about zero point 0.8 lot size, which means I risked roughly about a grand, $1,000. It's a nice 3.5R or 3.6R, so not a bad trade at all. Now you can find these trades on the profit wall on Discord. So if you do want to join me on Discord, just go to the signature at the bottom of a post and click the Discord link. That will take you straight to Discord, and you can join our Discord where we talk about trades and where you've got access to setups. For example, in the crypto section, you've got these setups which you can watch and have a look at. Just the idea of this is to grow the community, and it is to have people discussing trades, discussing their ideas, and sharing their ideas, and sharing their money making setups. But anyway, so this is the profit wall. This is the recent trade I'm still in. I just popped that in there because I wanted to show you guys. These are profits from prior weeks and in the past. These are profits when I used to use MEXC, which I still use, but just not as religiously. These are other people in there who have posted their profits over time. So feel free to join in, use these setups, and if you are making money from these setups, make sure you're putting your profits in there for myself. It's also just great for me to see that, as you are taking these signals, I'm not the only one benefiting from these signals. All right, so that's that. So let's take a look at the trades we were looking at earlier in the week and see how well these would have done. Okay. All right, so we've got about 216 people who saw this. This is a pre-Christmas scalp, so we call this. So we did get a Christmas present. We already got a Christmas gift. All right, it was a nice Christmas gift. So about 216 people saw it. I wonder how many people actually made money from it. Okay, so let's see what that trade is all about. I'm going to give you a quick overview of that setup and the reasoning behind it, and see how we were able to capitalize on it. Okay, so first things first, I actually think it's best to do this. I think it's best to do this on a higher time frame. I don't have to do it twice. Okay, so first things first, if we go on to like the 18 hour, we can see that Bitcoin is in a bit of an uptrend. It has slowed down a bit here. It's given us a bit of a range. Why am I saying it slowed down? Well, it simply slowed down because if we look at the amplitude of breaking structure from here to here, we've got about $8,000 move. I'm going to change this green because it's a bullish amplitude of breaking structure. If we look at the amplitude of breaking structure from here to here, we've got about $24,000 move. And if we look at the amplitude for breaking structure from here to, let's say, about here, we've got a $5,000 move. Some would argue that's not a decisive break in structure, but it's still a higher high nonetheless. And if we look at amplitude of breaking structure here, we've got about a $3,000 move. So anyone with eyes can see we are reducing in amplitude, hence why we've got this range. Okay, what is a range? A range is an area of a pause in price action or indecision on where price is consolidating before it either moves up or moves down. So inside of our range, we can see that we have our black structure, which is a higher time frame structure, and then we've got this internal structure, which is our secondary structure on this last expansion leg. Now, based on this internal structure, what we could see is that we create simply a higher low for a higher high. Very basic. Or that could come down and dip a bit more to SFP level before we head up. So that was our mentality. Now we're going to talk about the setup that we gave. Now, the setup that we gave is we said, well, we can see that in this expansion leg, we have flipped market structure on a 4 hour bearishly. That flip has had, one or two impulse continuation legs. Now we have also on the lower time frames, we flipped back structure. And because we've flipped back structure here, close to this level, it's telling us that we could potentially just flip structure to create, a higher low for another higher high. So because of this flipping structure, we were waiting for a retracement. We said to ourselves, now this retracement could start anywhere in this zone. Why this zone? Because this is an old supply range. Now we had a 1 hour zone, we had a 4 hour zone, and we had a Fibonacci zone in there. So we can see that we were getting a reaction from this Fibonacci zone. Now there was a little bit of hesitation. Why? Because this breaking structure was not as powerful / decisive as we would like it to be. All right, we only got one bull trend bar above that line, and following that we had a bear trend bar. Okay, but there's still a break nonetheless. So because of that, we had to look for a higher low because that is the expectation of order flow. Now, we said that high and low could take place in any one of these areas. It could react to this 1 hour demand zone, this 45-minute demand zone, this 30-minute demand zone, and this 15-minute demand zone. We didn't really care which because we're waiting for our confirmation before we enter the trade. Now, what was our confirmation? It was a flip in market structure from printing lower lows and lower highs to higher lows and higher highs. So what we can see next is, well, price said, well, forget this one. I'm not reacting here. We got a tiny reaction of this 45-minute one, but we broke it shortly after. We didn't get a breaking structure. Although we did get a breaking structure on the 30-minute, although it was short-lived. And then we got the decisive breaking structure on the 15-minute. So we're going to take a look at that and see why this was the Christmas gift special. This was the trade that would have paid for all your Christmas expenses. This was the trade that would have paid for all the gifts and everything you needed to buy. All right. So let's take a look at that and see how we go on and see, well, wow, we're actually running to time. So let's see how we go on. All right. So how did I enter that trade? I actually entered that trade on Monday. I think it was Monday evening. I was at basketball training. And I thought to myself, this is looking very nice. So I'm going to enter that trade. All right. So just to, build a narrative, what do we have as far as our market structure goes? As far as our market structure goes, we have low, 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 high. We have a low, low, a low, high. We have a low, low. Then this was the breaking structure we were talking about. We got a tiny little break, okay? And then that retracement came all the way down here, okay? Now, as we said, there were zones in here we could have got a reaction from, but the zone that we did get a reaction from was this zone here. So I'm just going to quickly draw that in so we can talk about that. It was this zone over here, which I believe was it a 15-minute zone? Slap a 15-minute in there. And then we also had a demand zone in there that we didn't quite, we got a reaction off of it. I think that was a 45-minute zone. Well, on here it's a 15-minute zone as well. So we can just play it as a 15-minute zone. Who cares? So we'll call that a 15-minute zone. Okay. Now let's talk about how we could have entered this trade. Let's see where we could have entered for this continuation play that we expected. So let's follow the price action. So we've got low, 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 high, low, 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 high, low, low. Do we have a breaking structure yet? No. Do we have a reason to enter a trade yet? No. Low, 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 high, low, 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 high. Breaking structure yet? No reason to enter yet? No. Low, 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 high, low, low. Low, high, low, low, and then we got a flip. So we have had our first break now, and that break took place right around this price point, which is about 94,952. Okay, so we got a break there. So this is where you might say to yourself, I'm going to enter this trade. So trader A would have said, I'm going to enter a long right here. So we enter a long here. We're going to put our stop loss. Down here. Trader B is going to say, I'm going to be patient. I'm going to wait for that retracement and I'm going to enter my trade from here instead. Okay, I'm still going to put my stop loss where trader A put his stop loss. All right, so we've got two different personalities here: the eager person to enter the trade and the patient trader. All right, so who was rewarded here? Well, in this case, the patient trader was only marginally rewarded. The risk reward here is 0.84 right now. Or let's take it to the high of that move. It was 1.39 here and 1.17. Not the best trade. Okay, now price had other plans. We can see here, obviously, hindsight's 2020, and we can see here that price had other plans to actually come down further. But I'm going to talk to you about the importance of trade management now, because entering a trade is half of it. Managing your trade whilst you're in your trade is the other half. So whenever you've entered your trade, price will tell you what it's about to do next. If you get a signal, if you get a sniff, if you get a clue that price is about to reverse on you, my friend, get out of that trade as soon as you can. And we did get a sniff here. Price told us that it was going to come back down. I'm going to talk about why it came back down in a second. Well, first of all, how did price tell us that? If we drop down to the 5 minute, we've had our breaking structure here. Okay, so price has created a higher high. What do we expect? We expect a higher low. Um, we expect a higher low for another higher high. What did we get? We did not get that. So as price played on internally, okay, sorry, price came a bit deeper down. So we'll just stretch that across, move this across. Okay, so internally, this is what price did. Price said, I'm going to come up, all right? But in order for us to conclusively said we've had a break in structure, what do we need to see? We need to see this level. We need to see a close above this level. Did we get a close above this level? No. We got an SFP of that level. In actual fact, not only did we get an SFP of that level, we actually got a flip in market structure at that level. So let's take a look at where that flip occurred. So if we take this expansion leg up there, this is kind of a bit annoying doing this all the time. But if we have a high, 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 low, high, 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 low, high, 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 low, high, high, okay, as presently constructed, again, look, we're starting to range. Why are we ranging here? Why is price consolidating here? Shouldn't price just be breaking all the way through? This is giving us clues that if we lose this structure now, get out of that trade. What happens shortly after? Well, shortly after we lose that structure, we get a tiny retracement and price decides to come down. So this is where you exit your trade. That is how market structure allows you to exit your trade. Okay, so we can see price comes down shortly after. Okay, and then it stops you out. Okay, so price would have stopped you out there. Now, as soon as you saw that, at the very least, move your stop loss to break even. Secure your money at the very least. You worked hard for that money. Don't throw it to the market just by not managing your trade. Okay, but actually, if you were a little bit more advanced, what you would have done is you would have said, actually, I can see that we're getting an SFP here. So actually, I'm going to reverse my belief and I'm going to short this instead. Okay, so what we're going to do here is we're going to say, all right, let's plan this short. As we plan this short, we're going to put our stop loss here. We put our stop loss there. Look for that retracement. We get the retracement and we flush that down. So if you look, I didn't do this, by the way. I did not do this, but it could have been done if you were watching it. I actually didn't enter that trade at all. So you would have got a nice 11x on that one. Very juicy trade on the short as soon as you saw that. All right, so you kind of have to be a bit more flexible with your approach with these markets. So that's that trade done. That's that trade done. And that's all of that out of the way. So what we're going to talk about now is the trade that I did enter, and let's see exactly how I was able to enter this one. So I said, right, well, this is the penultimate, the last demand zone before we take out this low and definitely come to this range. So if anything is about to stop price, it has to be this, or this point here. Okay, so what did price start to do here? Well, price, if we follow the structure on the way down, I'm gonna skip through all of this. So we've got high, low, 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 high, low, 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 high, flipping structure, low, low. Okay. So if we drop to the 12-minute, we can get more definite structure. On the 12-minute, we can see that we have a lower high, a low, 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 high, low, low. All right. So in order to justify a trade, I still need to wait and see. I need to wait to see for this level to get lost. All right. Now, if this level gets lost, I'm going to say actually, I can either do what trader A does. Trader A enters on the break, or I can wait to do what trader B does. Trader B will wait for a retracement. And perhaps that retracement might take place around here. Okay, so we're going to take a look and see how that planned out. And let's see how that goes. So we get that break. Look, we get a close above that prior low. Sorry, that prior high. Okay, and do we get a retracement? We've already had a tiny retracement here, which is clear on maybe, let's say, the 3-minute time frame. On the 3-minute time frame, I don't like that. Let's say on a 2-minute time frame. Again, I'll be hesitant to go and enter trades on a 2 minutes. So we have got a minuscule retracement here. But is that enough for me? Well, probably not, actually. But what I did enter is I entered on the break. I was trader A here. And the reason I was trader A is because I also saw that we had tap number 1, tap number 2, tap number 3 at that low. Nice little Wyckoff accumulation one. Okay. And so we looked to enter that trade. Now, if you were trader B, yeah, you could have waited for that retracement. And that retracement did come. Look, we did get a retracement, but not a deep one. We got a nice shallow retracement, but it was a retracement nonetheless. And I entered that trade. That's the trade I'm still currently in that I showed you guys earlier. And that trade, that trade has done well. It has done well. And let's see what the risk reward on that would have been. The risk reward on that, if I entered yeah, it would be about 3.76. If we cover the stop loss, about 3.5 risk to reward on that. That's what I've made so far. And it kind of makes sense. It kind of makes sense that is why, if we take a look at my profit margin at the moment, it's about $3,500, which is at 0.8 lot size, which suggests I've risked about $1,000 and I've made $3,500. So the maths is mathsing. Okay. If you were trader B, you'd have made a bit more on that one. You'd have made maybe about no, I was gonna say, yeah, that's because I haven't covered the low and the stop loss. So let's cover the low. You would have made about 4x. So not that much different. About 4x on that one. All right, but what can we see now? That's the trade we entered. That's the trade. Okay. Now, similar to what we talked about, let's see if we had any reason to exit the trade. Now, we broke structure. This was our first break in the structure. We had a retracement. Now, in the last case, we exited the trade here, didn't we? Why? Because we got SFP here. In this case, what happened? We blasted right through. This is what we like to see. This is what we like to see. We don't want to see hesitation here. We don't want to see a range here. We want to see a blast. We look how powerful these bars are. We've got these nice bull trend bars. How many do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 successive bull trend bars in a row. That is what I call bullish strength. Okay. And not only did we have that, we also swept all of this liquidity that we've been building up on the way down. We can see this curve of liquidity here that we've swept all the way up, similar to how we also swept the liquidity here that I didn't mention, but some of you would have noticed this. We also swept this liquidity here that we built up here. Okay, nice little build up of liquidity. Hence why price came back up here, swept that stop loss, retested it, and then dropped down. Okay, so that's kind of what has happened so far. So this was a great trade. If you caught that one, congratulations. If you didn't, well, there's going to be another trade. So where are we now? So I think it's a good time to clear this up. Let's clear up this mess. Okay. And let's see if we can plan a few trades. We've got about 5 minutes. If we want to talk trading and psychology today, we've got about 5 minutes to get through these trade ideas. All right. So we're going to make this nice and sharp. I'm going to say there's a bullish scenario and there's a bearish scenario. We're going to talk about the bullish scenario first, and then we're going to talk about the bearish scenario. Okay. So the bullish scenario is obviously that we've had this expansion leg up. This is a higher low, and this higher low is going to help us create another higher high. Well, if that's the case, then this is just a range. This is just a range that we can see that it's going to break up. Okay. However, price can do what it wants, right? So what we're going to do is we're going to treat it as a range and we're going to plan accordingly. This is our range high. This is our range low. Okay. If this is our range high, where am I looking for trades? Well, I'm looking for trades at my range low for a double bottom. We can call it a double bottom, bull flag, where we have, our flag. We have our impulse, we have a flag, we have a bottom that comes down here, 1. We have a bottom that comes again, 2, before we carry on up. So we can treat it like that. And if that's the case, well, why don't we look for a long here? Okay, we're going to look for a long there. All right, long number one. But we're going to say, okay, in the case that price doesn't quite come to sweep that liquidity level, could price react off anything else before that? Well, it can. It actually can, because we have a zone in there. We have a 5-minute zone locked in here that price could well react from. So we're going to call this a 5-minute zone. And we're going to say, well, price could react from that. So I'm going to extend this just a little bit higher and cover that as well. I'm not going to draw two trades because you get the idea. Now, what am I looking out here, though? Now, price has come, but it's come down quite aggressively. So if price is to react from here, I would like to see something like this happen. A nice flip in market structure as we come into that zone, retrace and head up. That's what I want to see, whereby the break occurs right around here. Okay, so that's what I want to see. But the way price is coming right now, I don't really like it. Okay, because the structure is not nice. It's not nice. It is not nice. But anyways, that's trade number one. Now, trade number two for the long side, well, I'm going to be looking at this old zone. This is our last demand zone, a last support before that impulse. So price could well be coming back down, just to get that move back up. Price could well be doing that. And in the case that price is doing that, I'm going to be looking for a long. Now, where am I going to be looking for that long? Um, Instinct tells me this region. Let's see what the volume profile is saying for this zone. Okay, yeah, so kind of that region. So what I'm going to do is I'm going to draw this out, and I'm going to say this is the zone I'm looking for that long. So last long zone. Okay. Now, I can't spell today. Last ling zone. But also there may be something trapped in here, and if there is, please take a look and let me know. Okay. But I haven't got time to do that right now because we're trying to get through as much as we can. All right. Now, the last long I'm also looking out for is if we don't actually come deep into that zone, if we get a nice little retracement off of the top of that zone, which I've seen happen time and time again. So that's also what I'm going to prep for. Okay, so these are my long areas as far as my next trades. All right, where are my short areas? Well, my short areas, area number one is going to be a deviation of this range high if we do come back up. And why am I looking out for shorts, actually, is the question. Why am I looking out for shorts? Well, the reason I'm looking out for shorts is, like I said, we could treat this as a double bottom bull flag, or we can also treat this whole thing as a double top bear flag. And the double top bear flag will look as follows. It will look like this, where we've got an impulse down. We've had the first top. We've come back down. We're going to have the second top, which is that double top. And then we're going to come down here. This may be what is in play, especially because we have not taken out this high. This high is still intact. And also is coming in line with that range high as well. So if we do get that trade, that would be a very juicy trade. So I'm going to extend that. Not only do we have a juicy trade there, we also have this 1 hour zone just on top of it. So if we do actually get a trade there, that would be very, 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 very nice. I would like that one. That might be one where I say, do you know what? Let me put a bit more spice on it. Maybe I risk 2% instead of 1%. Because that is my definition of spice. All right, cool. So that's a short trader looking at there. Short trade there. We've obviously got the short trades from prior levels. Is there anything else we should be looking after? Well, if we are to break up from this zone, these are the risky trades now, all right? If we are to break up from this zone and have something that looks like this, if we are to have something that looks like that, let me make it gray because purple is getting a bit dry. If we are to get something that looks like that, be cautious. Be cautious entering this long. It's still a potential long trade, but just be cautious because we're going to put a hazard light there. Be cautious because we have these zones above us. We are heading into supply. And if that's the case, we could get an aggressive move down at any point. So just be cautious if you're looking to enter that retracement long based off of this break. Okay, so just be cautious. That is a risky trade there, but I'm going to put it there nonetheless. Now, if we are to enter a short, another risky, it's not really a risky short, but if we break bearishly from this range, no reason why you can't wait for a retracement and sweep that down to this old zone. Now, you might think that's not a big move, right? But if you're able to catch it properly, yeah, that could be at least a 5x. All right, at least a 7x. If we, let's say, plans out like this is a 6x trade. Okay, so we're going to be looking out for that as well. All right, I'm not going to add these in there, but you get the idea. Okay, so that's kind of what I'm looking out for at the moment. If there is anything else, I am not really interested. If there's anything else, yeah, I'm not really interested. And that's what I'm going to look out for today, tomorrow, the rest of the week. Um, of course, if price continues to come back down, I am obviously going to be looking at this low, this range low, to see if we can get a flip there. We've already played this one out. If we can get a flip here, why not? All right, so I think that's worth putting in, but that's kind of an obvious one. All right, so we've done really well today. We've actually managed to get through a lot as far as the trade setups go. That's what I'm looking out for. So we've got shorts up there. We've got all our trades in here, and uh, that's what we're looking out for today. Now, if you are looking to learn how to trade like this, how to read the markets with more precision, I've got one-to-one. Where is Discord? So get rid of that. I have got, this Discord group where you can inquire, one-to-one lesson inquiry. You know, just drop a message in there and then we can have a conversation. If you wanted hourly lessons, if you wanted group lessons, if you wanted a package, if you're just looking to upscale your trading, feel free to drop me a message there. I usually try and get back to you within 24 hours, but it can delay from time to time. All right. So we've done really well today. We have got through a lot of the material we wanted to get through. So we've actually got about 5 minutes. So I think now is a good time to talk about some trading psychology and see how we can, improve our mentality as traders. Now, as we talked, last session, we said, well, in trading, first of all, we said trading is not easy, right? We said trading is not easy. Let me refresh this. All right, we said trading is not easy. Didn't we? We said trading is not easy. We said you have to recognize in trading there are obstacles in the way. We said you have to recognize that it's tough to be consistent. We said you have to recognize that trading nonchalantly is not going to get you anywhere. You have to document your trading. You have to put in at least 10,000 hours of doing it well, the right way. You have to risk manage. Stop wasting your time if you're just putting random lot sizes on your trading platform, because you actually can't measure your improvement. Just like athletes measure their analytics, you have to do the same as a trader as well. And we said a perfect system does not exist. We said trading mistakes is part of the game, but trading mistakes, not trading mistakes is not part of the game. Losing money is part of the game. Losing trades is part of the game, but trading with high efficiency, i.e., low mistake rate or low mistake level, is where you can improve as a trader. So what we're going to talk about today, I think we've got about 5 minutes. Let me just double check. Actually, about 3 minutes. So what we're going to talk about today, perhaps, is trading beliefs. First of all, how do you get your trading beliefs? How did you form your identity as a trader? Why did you want to be a trader initially? Anyways, okay. So usually, most traders, 99.999999999% of traders come into the game thinking, I want to be financially free. And that is fine, but you have to define, what does financial freedom mean to yourself? Is financial freedom saying, okay, I want to be able to sustain myself for the next 20 years without going to work? Or is it, I want to sustain myself for the next 5 years so that I don't have to go to work? Now, you have to calculate that. What is your expenses? Based off of your expenses, how much do I need to survive, and how much passive income can I make through trading to supplement that? But how do you form these beliefs? Well, first of all, your beliefs form through your five senses. All right. So you've got what you see, what you hear, what you talk about, the news, YouTube. This is how you have formed your beliefs about the market. Obviously, you've got intuition that plays a part, but intuition is very subjective. So are your five senses, by the way. And also, you form beliefs based on your social group, your environment, your workplace. If you're working in the financial markets, or you're working as a trader, you're working at Goldman, JP, a lot of the information you receive there is very, fast paced. It's very much, okay, what is the next big thing? What is the next big move? So based on that, you are forming your social bias based on that. But once you understand how you form your beliefs, what you want to also understand is, okay, how do these beliefs affect my trading? Are these beliefs, are they positive or are they negative? Okay. And are they allowing you to come close to your goal, or are they taking you further away from your goal? Okay. And what emotions are these beliefs inciting in me? If my belief is I want to make £2 million this year so I can quit my job, well, that's, you might think that's a positive belief system, but that's actually a negative belief. Why? Because it's exciting a negative emotion in you. Yes, you're getting a positive drive to learn trading and, risk manage and do spend 600,000 hours on TA. Yes, but you're also, every single day you are not reaching that goal, you're having some negative buildup of emotions, some negatively charged emotions, which is saying, man, I want 1 million, I want 2 million, but I'm looking at my P&L, there's only 5K in there, it's only 10K in there. Okay. So make sure you are understanding how these beliefs are coming about. Now, what you want to try and do is you want to go from a trader that says, I'm going to unconsciously react and take actions based on my beliefs, okay, to a trader who is more successful that says, I'm aware of my beliefs, okay, I'm in control of my beliefs, and I make decisions in a non-impulsive way. Okay, now once you understand that and you flesh that out, then you can go into actually saying, actually, do you know what? I want to cultivate the right beliefs. Okay. I want to increase my trading consciousness, and I don't want to trade from a place of shame, grief, apathy, fear, desire, anger, pride. All right. Greed is a big one, right? I should add greed to this. And I actually want to trade from a position of, neutrality, acceptance, reason, peace, enlightenment, and courage. That's a way healthier place to trade from, oh my goodness, I need to do this. I need to buy this house. I need this trade to work out. And what you find is that the best traders in the world, they are operating from this sphere, this realm, less so than they are this realm. Okay, but that's all we're going to talk about today. Just chew on that for the next few days slash few weeks, and then we're going to talk a bit about some of the other stuff I've got written down here in the future. But if you found this useful, don't forget to hit the boost button, and I will see you next time.